Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Tuesday, October 31st, 2023. First of all, another month has zipped on by, and here we are still within a third wave coming down. I'm going to start again with the S&P, and I'm going to begin on the 4-hour chart. And the first thing I'm going to talk about is how I have revised the count of this minor third wave. And initially I had marked this as minute 1, 2, and this then completing minute 3, being 1, 2, 3, 4, 5. I've pushed that back and feel that these were all minuet waves coming down. And it's still the 5, but it's only minute wave 1. I believe I spoke about this probably maybe a week ago or at the end of last week. I know I spoke about it, but didn't employ it. Now I've gone back primarily because of the NASDAQ, and I'll get into that in a moment, on the height of this rally phase that the NASDAQ has been going through, and in advance of tomorrow's Fed decision, and then also Thursday, Apple's earnings on Thursday. So there's been a lot of churning and buying and pushing and shoving within the NASDAQ, but it always seems that it's like a flavor of the day where one stock will get killed one day and the next day they kind of come back and they start buying it again. So that being said, I've moved the minute first wave down to first wave, minute 1 of minor 3, down to that 41.22 low, which we saw last Friday. So out of that, we are in a wave 2, minute wave 2, instead of a minute wave 4. It's only minute wave 2. And it puts a little bit greater potential, or higher potential, I should say, for that minute second wave. So initially, if we're looking for a fourth wave, it would be 0.382. We're looking for 38% retracement, which is the most common. And at that time, it was pretty much in the same area, maybe a point or two difference, because this is 42.22 and this is 44.22. This is 44.30. So there's an 8-point difference. So if I even calculate that in, we were looking at 42.30, 35 or 34, I believe. And I think it was coming in maybe even a little bit lower and matching up with some of the moving averages. So right now, the market got as high as 42.15, and that resistance previous, the 382 resistance previously, was still above at like 42.37, I think, or 35. But what we did have some initial resistance for a C wave within. So let me drop this down and I can explain. We'll go to the 30-day. We're going to go inside here. That the way that I kind of put this down is ABC, A, B, 1, 2, 3, 4, coming up in a 5. That still could be the case. But again, ABC, X, ABC also can be the case. And so we can run fibs a couple of ways, and we'll see what works out, actually. ABC, so it's going to be coming up to here. We're going to go down to there. If we're looking at a C wave, you can see 42.42 is 100%, and we're now up towards these upper levels. 42.76, 42.88, etc. Getting up in terms of if it's going to be a little bit larger. So again, if this is ABC A and this is B, or if this is ABC in entirety and this is an X wave, then how large or where can the next ABC come in if this is A, B, and then we're in that C wave? So we can do one more. In terms of we're filling in blanks here. None of this is cast in stone, but as you're working through. So we have 618, and then we have a little bit higher. If it were to come in and just be like 1, 2, and this is a third, and then a 4, or A, B, and now we're looking for the C wave. So it's a lot of fibs that I'm not going to leave on the chart, whereas this one in particular might fit a little bit better. What I do have up on that chart, I'm going to go back to the 4-hour. What I do have on that chart are for minute wave 2, and those are here. So I'm going to take this back off again. And what we have is 4240, which would be 0.382. And it may just come in right there. That is a level, it is a fib, and it does fit for both 2 and 4. Wave 2 most often, though, will come in at 50 to 62%, and that takes us to 4276 or 4312. In the process of that, it's going to have to first break above, and this is on the 4-hour chart, the 4-hour 50 simple moving average. And that right now is sitting at 4221. And then we have the 100 again on the 4-hour chart sitting at 4300. 4300 is going to be big resistance anyway. Right now, it was strong support on the way down, should be strong resistance coming back up. And then we have that 618 at 4312 along with the 4-hour 200 period at 4339. Now, if I break this down and we take a look at the hourly chart, we've gone past and rallied strongly. So that helped to propel the market today, in that we broke above the, we held the 50. So let's say the 50 came down and now it has moved flat. So that provided support down below 4165. And we got as low as 4187. And no, it's just 4171. So we had that support underneath, and then we came down when we sold off early today. We came down to 4171 and then blasted. So what could it be here? We're looking at the same story. We do have what appears to be an ABC, and that could be wave A, and this could be wave B, or it can be an ABCX, ABC, or if it's an ABC A, and this is a B, and then it's 1, 2, 3, 4, and then we have a 5. And what we can kind of look at here is, if indeed we're working a 5-wave structure up, we're going to go like that and then put this over like that, and we're looking again. See, 42.35, 42.40, 42.55. So we're in the area of where the market can possibly go. Now, what would have to happen? Well, the market would, first of all, need to be responding more positively towards just the Fed and anything else that may come out tomorrow. We do have some additional economic numbers. On Wednesday, we have the ADP Employment. And they're expecting, 130,000 new jobs versus 89 previous. So, yeah, who knows? The S&P U.S. manufacturing, the PMI. We have job openings. We have ISM manufacturing. We have construction spending. And then we have the Federal Reserve. So starting at 8:15, we've got a lot of economic information, which will build and finish up with the Fed decision. But again, the market, as we're being told, and if you listen to financial media, they're basically saying it's pretty much signed, sealed, delivered that the Fed will pause interest rates for this meeting. And that may be the case. It is pretty much, I believe, what the market is still factoring in. What's going to be more important, which it was the same as the last meeting, when they paused. Actually, no, they raised it, they paused. I can't even remember. But what really produced the move in the markets was the press conference, Powell's press conference. So I'm going to imagine if they pause again, then what everyone's going to be glued to is Powell's statements moving forward. And because now we're going to decide, are you going to pause again in December? So is this like, you're just going to let us go out the end of this year? And so, of course, the story is, then that's going to should produce a solid year-end rally, et cetera, et cetera. So again, I don't want to go that far. I'm just kind of saying what we got coming tomorrow and where the market is going to lean. So if we're expecting that they're going to continue this rally and maybe get up to that 4,300 level, right? Right now, finishing up at 4,200, basically 4,204, I believe it is. Yeah, pretty much. And actually marked down a little bit immediately after. So in any case, 4,204 being the close, and you're looking at the possibility of 4,300. So there has to be a lot of positivity starting from the economic numbers coming out. If those economic numbers are not really going to be jiving with continuing a strong rally phase, then it's going to be more in line with that Powell may not speak gloriously of how everything is going right now. So a lot going on. And why I say it that way is because we also do run a very strong possibility and a higher probability that we're just going to go up here because it will finish, in my view. And then that'll be it. Wave 2 done, not fulfilling its greater potential of doing a 50 to 62% retracement of that first wave, only coming in at a 38% retracement. It's not the most common, it's the number 3. Well, first would be like 50 to 62, number 2, actually 2, 53, 2, excuse me, 1, 52, 62%, 3, 38%. So, but not out of the picture that it could just finish up there and then we start our decline. And again, part of why I've changed this is that, going back out to that 4-hour real quickly, I have been talking in depth. In fact, I did it over the weekend in the big picture update, that I'm really not seeing this market engage in the heavier selling that I will associate or do associate with a third move, a 3 of 3 move, or even within the third wave. We had nice periods of where they were selling, but they were always intertwined with these strong pushes right back up and out. Now, a lot of that, again, goes along with how 0DT options are trading, or just expirations that come during the week. And so, all things considered, I am putting this as a minute wave 1, and then minute wave 3 of minor wave 3 of intermediate wave 3. So again, we're in that 3 of 3 of 3 type move. Could really just kind of roll and go and keep going and take us down to these levels where we need to get below 4,000. Let's just, to give stronger confirmation that the primary C is in gear and that the internals are in gear and dropping this market down. Now, also, I am in a great conversation with a subscriber regarding diagonal triangles. And not that they've ever been my favorite, that I always notice them and I catch them, because I be honest, that is not a part of where I go immediately. But it's really being brought to my attention that, in revisions that are being made to Elliott in terms of how we count and what rules apply to what, there's a lot of discussion on diagonals. And actually, I've been paying attention. I don't want to believe that I'm not, because I am paying attention to that. And it does begin to make sense as I go back and review. So part of what this great subscriber has brought to me, and to all of us actually, because it's leaving it as a comment that we all can read, is that we're likely, I had already been discussing minute wave 1, and part of the initial discussion that we had was that he basically was standing in agreement with me on it's likely minute wave 1, and that don't count it as 3. And I left it there And then this was his first comment, again, going back to the weekend update. And so then I went back and I thought, I'm going to do it. And the reason is because of the NASDAQ. Now, let me just finish this up. So again, we have some additional upside targets. And I'm not going to leave all of these fibs on because they become a little bit confusing. I'm sticking with the majors, and that being for the minute second wave, 4240, 4276, 4313. We'll call it. Plus the moving averages in between. Those are on the 4-hour chart. If we bring it down to the 1-hour chart, again, those remain the same, but we have the hourly 200 at 42.26. And quite frankly, that could finish it 42.26 to 42.40. Hang a 2 on there, and then we go. Again, remember, third waves, they usually kick off by something not good, particularly if it's to the downside. To the upside, it's a surprise. It's a surprise to the market. Something comes out, they love it, and it just like launches in the third. Now, this is how I'm going to leave it right now and go over to the NASDAQ to discuss. The NASDAQ is the one that really pushed me to change. Excuse me. And again, I had placed a minute wave 3 here, looking for the minute wave 4, a very complex, very corrective in nature, ABCX, ABCX, ABC, all kinds of things going on here. But the first thing that I kind of went to is that when I had put it together for just the fibs on a wave 4, and that would have been marked as such, we were reaching up into areas that I just didn't think we should kind of get to. We hadn't even got to here, but we were pushing tighter. And let me go inside. So let me take this back down and go back over to, because I wanted to show if we're going in, and I've got an ABCX, AB, we don't know what all this is. See, that's the problem. This is kind of very confusing, and the NASDAQ has been, but it's not to me impulsive. So if anything, it's ABCX, ABC, ABC possibly, but I began to look, ABCX. So we can run fibs, here down to here, and we started to run into these higher levels, pushing me above where I thought we should be. And so I think I put another one on here. If we kind of go, even it was ABC, ABC. Let me do this once again. Remove that and start here. ABC for the first A, and then A, B, C for the second, for that B wave. And you could see where we were getting. We were getting up pretty high to what this could be. Even if this is ABC, A, B, C, the first larger A, ABC X maybe, A, B, C, A, B, C. So there's so many combinations that I just felt that it left too much upside, left too much room to the upside. And so I came back out, went to that 4-hour chart, did a little bit of work, pulled everything off, and thought 1, 2, 3, 4, 5. And whether or not in the NASDAQ, it could be more of a diagonal coming down. I really could. 4 does not overlap 1, and that's common, but there's this pretty much really on my 4-hour chart looks like a 3. This looks like a 3. And this could be, it counts down as 5, but a 3. And then this counts pretty much cleanly as a 5, but it looks more as a 3. So you're getting, that's the idea of a diagonal. It's like there are no set rules that it has to be this. So you get these combinations in between. And that I think we need to really take a look at that. Now, that's not necessarily R.N. Elliott writing, but it is other respected analysts who are discussing their findings in what they're seeing in terms of diagonals that not as often show up in an equity index, but show up a lot more in the dollar, in gold, in silver, in commodities. And so also they do within the stock market, but not as many times as I have seen them form in gold or in the dollar. So, but that answers a lot of questions when you're getting caught and you're going like, well, gee, what is that? What can it be? And you're stretching things out. So again, because of the upside potential here, I put the one. I went and put the one here, and then it also fit very, very cleanly within the S&P. So the first thing that I'm going to put up, instead of clouding it up with downside, I did leave the larger, right? So what we still have is primary B, so we're still in that primary C wave, and those fibs are still on there. But now we're looking at the fibs for, or the rally part. And the fact that the NASDAQ continues to just power higher. So again, I am going to, the only one I'm really going to take off is that 786 right now, because it's not really inclusive, and I just want to go up this high. I'm leaving 0.236 because we continue to play right in around this area. Now, what all of this is after hours, right? Because we ran up strongly just at the beginning of the last hour, we ran up to 14,503, 503, almost 504, and then hung out up there until we got the close, and then AMD reported. And AMD currently is trading at 98.50, which is going to be unchanged to where the market closed. But interesting. So we might just, the market's going to take back everything it just did. So we have earnings after earnings. So this was the earnings. What happened? And we can drop it down to the hourly chart and see it even cleaner. Bam. And then this is the now. In the last 15 minutes, I guess they had the press conference. And so they just ran it all the way back up to actually higher than where it closed. Stock closed up 232 at 98.50. Then it traded all the way down to 93.50. Now it's traded all the way back up to 98.75. And now it's sinking back down again. So again, very strange, but that's why the NASDAQ really slid in that extra hour that they give for funds and everybody else to come in and do their thing. So a lot to unpack today, right? So again, back to this picture. It's not this to me. Everybody wants to talk about, oversold or whatever. Market is presenting a bullish picture. This is not a liftoff. Now, if anything, this is going to be a bunch of threes, and it is going to be a diagonal. But even a diagonal, folks, diagonal, right? Diagonal forms a wedge, a diagonal. It's not diagonal. That's my other problem that I'm having with a lot of people saying, well, I'm seeing that this is a possible diagonal triangle. Remember, the triangle is three sides and it wedges. Expanding, it's starting from the low then, and it's wedging outward. So our channel lines should be expanding. Otherwise, if it's going in the other direction, so it's wedging, then they should also go more into a diagonal or triangle type position. So either we're starting at the apex of the triangle and it's expanding, or it's diagonal and we're moving towards that pinnacle, that point of where everything's going to meet and either in this case die or roar. So if it was a downside diagonal, you're looking for that bottom and for it to kind of reverse and go in the other direction, lickety split. This one would be in a wave 2 position, and we'd be looking for it to drop, stop and drop. But so again, wave 1 potential is for the market to continue to rally right now, but we have given now more room for this rally to pick up some steam and to go. I do not know what Apple's earnings are going to show, or how, you know, the press conference is going to go. I do not know what, and people, if somebody says that they know for certain, I thank you. I don't need to hear that, because I don't have that crystal ball. And I don't have a private phone line that goes to Jerome Powell that he's going to let me know ahead of time what he's going to say tomorrow. Now, granted that at the start of his press conference, just the second that they're getting ready to start, all of those notes are released. Now, supposedly, we get them all at the same time as everybody else, but we know that that's just not the case, because we see the market react as artificial intelligence scours through, grabs what it wants, and forces out orders into the marketplace to reflect the interpretation. So again, it's going to be an interesting Fed meeting, because we're going to get what the market is expecting as a pause. Anything less or more could be very changing in terms of response from the market. And then also we're going to get a response from the conference, press conference that Powell will give and do. So, but right now we have the potential. Now I'm here on the hourly chart. How this is all going to be counted, it's a toughie. ABC, A. And this could be ABC and it's a running B. ABC, A, ABC, A, B. Yeah. And see how crazy it gets? You just kind of get to a point where it's like, wow, I'm not really sure. ABC, A, B, C, and that's an A wave. And then we get an A, B, C, B, and then we get a 1, 2. Did it go to a new low? Probably. So again, what it's actually producing, we just have to let it go and come to fruition here at some point. So again, you could try to put in the channel lines and they just don't necessarily fit. But wave 2, not very often where I've seen a triangle pattern in a wave 2 position, but it can be a triple ABC. That I've seen, a double or a triple, and that's just, but with an upward bias here. So again, we've not even reached the 14,064, but this could be a triple ABC and just B wave A. Then we get a B wave and a C wave. So the potential for the market remains that we can go, first of all, minimally 14,064. Now, prior, let me just wrap that up and show you what was up there prior if this was 3 and we were looking for 4. That 4 would come 14,597. So now it's up to 14,647 if it's a wave 2. Then the continuation of wave 4 would have been 14,738 as 50%, which is possible. Here's the previous 4. That worked. Now that sits at 14,800. Still possible. No matter what, we had minute wave 1 here, or this is minuet wave 1. So that's the do not break zone at 15,000. But that doesn't mean the market could not get as close as it wants to. In a wave 2, it could. Doesn't mean it has to. And I'm finding that there's a possibility it won't. So here's the other side of this coin. I changed it. It could change back. But I'm going to be reluctant to change it back and just rather say that the wave 2 is going to come in a little bit weaker than we expected, but still a corrective wave nonetheless. And why? Because I would be looking for that third wave to be much more destructive than a fifth wave. That would be the primary reason. And because I had been discussing, this is what I'm expecting, but on a much larger scale. And that's what I'm looking to see. Look at that. Red, green, all the way down. For third wave, and a minute third, even my minuet third inside of the minute, no. So again, I'd be looking for this to come in on a larger scale and to do a lot more damage. So this is how we're going to leave this right now. Again, I'm going to take off this lesser one because we're using the larger. And that's for the whole thing. Those are our fibs. We're going to see what happens. In the way, we have the hourly 200 at 14,580. Let's see what they do at the start of Globex. Let's see what they do in the initial part of tomorrow. Fed comes out. We have a slew again. Let me just review. We have a slew. We have ADP Employment at 8:15 a.m. That could be a page turner. That could be also a wave turner. So that comes out at 8:15 a.m., 8:30 Treasury Quarterly Refunding Statement. That actually is going to be a little bit on the positive side. I did read today that the refunding statement should show that they are reducing the need, I think, by $73 or $76 billion. That's the reason that the bond market kind of took off at one point, gave it all back. So again, maybe that was just hearsay. And we're going to find out tomorrow from this quarterly refunding statement on what the needs are going to be. And that's at 8:30. 9:45, we have S&P U.S. manufacturing PMI. And then 10 a.m., we have job openings. 10 a.m. also ISM manufacturing and construction spending. ISM manufacturing is usually a pretty good market mover. We're going to see. And then, of course, at 2 p.m., the Federal Reserve, and 2:30, Powell's press conference. I'm going to end it there. And thank you again for spending time with me today. And hopefully we'll all follow. I welcome comments. I try to answer them, and also in questions. I know it's been very confusing, but please remember that Elliott wave in an active market has to remain fluid. We can't throw something up and say that's concrete. It can't change because the market is changing. So we have to remain a little bit more flexible in terms of how we want to view something. I'm not changing the overall pattern that what I find. I'm continuing to see the market as completing that primary B wave, and we're heading lower in a primary C wave that, in my view now, again, continues to really knock on the door that is about ready to kick in a lot stronger to the downside. All right, next update will be on Wednesday, November the 1st.